Okay, hi there, guys. Hope you can hear me loud and clear. Right, just speak up if you can hear me, and just so I know who's actually in, who's going to listen to my monotone voice. Got myself a coffee, so I'm right to go. Bobby, how are you, mate? Thanks, Bobby, also for retweeting and liking the tweets that go through. Much appreciated. All right, we'll get I'm assuming we're all good to go, so we'll get up and running. Now, thanks for joining us in the live stream, Lauren. Yeah, I need that coffee, mate. G'day, Sharon. I really do need my coffee. I only have two a day. I've cut right back. Well, actually, not right back, just cut it in half. I figure it was good for the day, but it wasn't good for getting to bed when you have too many coffees. So instead of mucking around the computer at night, I might just start reading again. Reading books, it generally puts me to sleep pretty well. That and reducing the coffee is going to help. Um, enough of that. Enough. You get me sidetracked. Thanks for joining us at TradeSetup live stream. Anyone that's new, I know there might be a few on today, or a few might listen to it later on. We're going to talk about the ASX200, just where it's heading, and it's heading south at the moment, which is interesting. So, yeah, for anyone that's new, you can see in the top left-hand corner, that's our Twitter feed. So through TradeSetup. Yeah, great if you can link into us there. Top right is our Facebook. Facebook's going to be the same sort of material that's coming through on TradeSetup. And the bottom right-hand corner, that's us. If you subscribe to us at YouTube, at what is it? At TradeSetup, capital AU. And then anytime we do go live and anything, you'll get a pop-up from YouTube as well if you're not subscribed to the TradeSetup app. So, especially if it's through there. And just our general advice warning for anyone that's new there. We don't give specific advice or personal advice. It's just opinions only, right or wrong. Especially if I'm wrong, it's just my opinion. All right, so today what I'm going to focus on and what I'm just going to chat about is um, a bit of candle analysis. I know we've got a few fundamentalists in here, but for people that are interested in technicals and also chatting about, it sort of comes down to the importance of when to get out. And what I've done in the past for many years is really focused on, and this is probably right from the start of getting into the technicals and getting into your trading. It's really, I think everyone focuses in a lot on your entries and perfecting your entries and doing that. I know I did focus quite a bit. Now, it's important. Obviously, it's important that your timing and the right zones to making sure you get into the right zones. But on the flip side, I guess I think once you're into, you've got to make sure that your psychology doesn't change. I think that's a big issue for exiting. It's easy to exit. It's easier. I find it easier to enter when I'm not in the trade because you're thinking a bit clearer. What you're going through mentally is more neutral. You haven't any skin in the game, but when you do put your skin in the game and you actually get in, then it can change your bias and you can start, readjusting the way you trade. So I think it's just as important. Your exits are just as well, sometimes more important than your entries, and really managing that risk appropriately. So we'll probably just touch on that today. And then later on, like I mentioned, I'll go over the ASX, the XJO, and the SPY 200, see where that's heading, especially in the lower time frame charts, because we've got a few people that are interested in that at the moment. And then, not much happened on Friday night. I think the market was initially negative because of what the news from Thursday about Trump potentially not meeting up with China before the was it the 1st of March deadline for trade talks, or to sort out the trade tariffs issues, whatever it is. But then I think later on, or early hours of Saturday morning, I think there's news that the next meeting will be in a week or so over in China. So they'll be nutting that out again. So that's, you can see if you look at a 30-minute chart on the Dow, started headed south and then pretty much bounced, turned on a dime, went straight back up into the close, which means that people pretty much the main thing at the moment. I mean, we've got obviously the global economy slowing down. That's a bit of a concern, but still, people are just waiting to get through these trade issues and see how that's going to play out. Because they get through that, they can work themselves out. Then I think that could longer term, shorter to longer term or medium term, really help out growth, global growth, and get it kick-started again. Maybe, we don't know. But I think that's foremost on traders' minds at the moment, as you can see by the action in the ASX. Not so much the ASX, but over in the US, any sort of talk pops up, they'll react to it quite well. So yeah, the market all in all, I think the Dow was down. You could see that because it's got exposure to trade, whereas the broader market S&P 500 is pretty much neutral, up slightly, along with the Nasdaq up slightly. But yeah, the Dow, which is sort of the main, it oscillates around with trade war talks, tariff talk, and that was down. It bounced off its lows, but not enough to bring it back to neutral territory from the previous close. Let's get rid of that first. I'll get myself organized, and I've got to adjust the charts. I think, is that right? There you go. Is that too close? What's looking different? Okay, I think that's right. No, that's right. That's the one. All right, so this is actually I won't get onto that. I just want to go quickly. Let's go back here. Oh, let's not go back there. Let's go back. Why is it coming back up? It doesn't want to. Here we go. Let's close it down. That'll get rid of it. First things first. I'll get onto just the global markets just to see where all the markets are. Indices. Let's go here. So the Dow. I don't want that chart either, do I? I want index. There we go. It's a bit cleaner. Thick. There we are. So you can see last couple of sessions on the Dow, was it Thursday night, it was down on obviously on that news, and we saw that little wick put in. So yeah, it's a bounce off the lows during the intra session or intraday session. Had a powerful move. I think this is a bit overcooked because it was through just after Christmas, and that bounce on pretty much a thin market through Christmas. Same with the ASX. Very, very thin market once the market's closed. I mean, I've been speaking to someone recently and just talking about trying to get into some entries for our trade setup. But the problem is, from when we closed down for 2 weeks, it bounced 400 points out of about 600 that's rallied off those lows. And in a thin market, maybe it was extended in the thin market once all the buyers dried up because of what was causing the market get sold off quite hard and the fear in there. But then it's bounced in the thin market as well. So we're back to where we are. We'll take a look at the XJR at the moment. I just pretty much, I think if you draw a line across the tops here, you're going to come into about that 25, sorry, on the ASX anyway, the highs where we are. So we'll take a look at that in a sec. The Dow's bounced back pretty hard. Maybe just a minor corrective action, whether we get this type of correction again, where it's just, we popped up, pulled back, sat on top of the MAs, and that's the 20 and the 50. So we've got sat on top of the 50 MA, they've crossed later on as we've gone back up. Whether we do that again and just bounce around, hover around that 25,000 mark, and then start to rally from there, we don't know. I mean, it's all, if you're long, great, you're just going to manage your risk according to the macro themes around the market at the moment, and nothing much has changed. It's harder for the bulls to kick on the market when we're up here, especially over in the US, because nothing has really changed in the way of news, and we've still got some underlying headwinds that are going to put pressure on the market or cap the market a bit, and they haven't changed just yet. Now, if they come out and we get sorted out, especially China and the US, then we might see a good little pop run up to the highs. Who knows what's going to happen after that? But at the moment, if something more, I wouldn't say more sinister kicks off, we could fall back down quite easily, back down to those lows. Whether we get to 22,000, we don't know. Just remember, if anyone went through the GFC, traded through the GFC, remember that the initial news broke and the market sold off. We were trading around 64. I don't know where we pushed down to, but pretty much that initial retracement was about 50% of that move down to about 5,800, and everyone was talking up, saying, okay, it's all out of the woods, it's all over. And then bang, we pretty much capitulated down to about 2,700 on the ASX after that. So I'm not saying that can happen, but just because we put in a low here and it's reacted quite hard off there, it doesn't mean we can't, something can come out of the wings and really drive us lower, because there's still a bit of fear around, growth is slowing, all those sorts of things that are weighing on the market and weighing on psychology. And I think it's the first time for a while the US earnings haven't hit the mark. I think they're going to be down slightly, um, over the whole 500. So yeah, there's a few things weighing on the market. That's the Dow. I think the S&P is not going to be much different. You can see it's the same sort of thing. We'll go to the Hang Seng. Hang Seng looks a bit better. I mean, if you go back to the weekly, you can see it's pulled back pretty much through 2018, put in a high low. So for me, I'm not saying that's bullish at all, but after quite a hefty correction, that's quite good. Whereas the market's generally corrected, what was that, back in September, October? Correct in October, whereas the Hang Seng was correcting before that, previously. So they've got their own little issues, but whether that's getting worked out, whether we're going to get put in a bit of a base here, longer term, start to build from there, and just do this type of thing. Pull back, high, low, regain some ground, sit on top of the EMAs, high, low, and just grind their way back up, and they go back into the new highs. Don't know. FTSE, they still got their issues. That looks a bit more negative, like it could just hold this 72 zone and roll over and have a deeper correction, especially on the weekly. The daily, you just got those two-legged moves, I guess you can say, higher. So we popped up, had a correction, popped up. Whether we're just going to correct, build another high low on the daily, and that's going to get a bit stretched on the weekly, we don't know just yet. We just have to play it as we see it. What else we got? The DAX. DAX is the last one. Just got to find it. There we go. That's the European DAX there. So they've been struggling the last few days. You can see they've had a couple of big down days. Still struggling a bit. So we'll see how that goes. You go back to the weekly, so you can see this type of price action. If you're a bull, you don't really want to see this. I mean, it's got sold off into the end of last year, Christmas bounce, thinner volumes, but even once the volumes started coming back in, we've popped down again. So whether this is the start of a new leg or a retest of those lows, you got to flick back a chart. The thing is, it's taken out a lot of these buys that built up over the last few years, even. So pretty much 2018 was nothing for them. They started off on the highs, sold off, then built a lower high, and then sold off towards the. So they started the sell-off prior to the US, well before the US. That was probably about May. Um, so yeah, it's like the markets are anticipating this rollover in the US, and then we got that. We probably started about the same time. I think we're hovering around that 62 or so. Yeah, and it was about the same time as the US rollover. So we're probably just we're following the US at the moment. This weekly chart to me doesn't look too healthy. We've corrected over 50% of that move down. I'd say we're stretched at the moment. But the thing is, once we had that, well, just recently when we found out the banks got off scot-free, the market's bounced, and maybe that was what's dragged us overextended on the downside. And we probably, maybe we should have held up at 56 instead. We got down to 54. If that's the case, sort of that overzealous selling, and we bounce back pretty hard because we know now that the banks are out, they're fine. They're probably going to benefit from what's happening to the mortgage brokers. Who knows? I'd say they would, and they're not really. I mean, we've had a couple of people from NAB leave, but all in all, that's what created that push through. If we go back, it's through this. This was the level we're watching, 59.50, and it's as soon as that news has come out, bang, straight up and through that level. So it's taken out, and that's the anchor to the downtrend, especially on the weekly. You can see that 59.50 zone just in here, and that was the key zone, which it was holding just below that. I wouldn't have been a bull at all. I was more bearish at that stage, but the fact that it's blown through, you have to change your analysis. We know it's broken an anchor, it's broken this trend down. So where to from here? Are we just correcting that leg? If that's so, are we going to pull back, build a major high low on the weekly charts and start to go? We are extended up here. So there's a few factors that got to go through your head just to see what your plan is going to be going forward. If we go to the XJO, so this is our CFD on the Aussie 200. And keep, this is only the hourly chart, but I've marked it up. If I can just take a step back, I'll go back to the daily. Just want to have some coffee. Okay, so you can see, let's get rid of that. This is the hourly chart. Sorry, this is the daily chart here. I'll get rid of that. Now, the market, you can see this just what we're looking at before. In essence, they might have slightly different numbers being the CFD, but in essence, the price action is exactly the same. You've had your move down. We had our key level here at that stage at 59, or around 59.50. It's pushed down. It consolidated just below that resistance zone, then punched through once the Royal Commission, the results were heard. But what it's done, if you can scroll back, if you take a support zone through the lows, this could be a major lower high coming into play. So if that's the case, this leg down is just the first of two, potentially. I mean, this is all ifs and buts, but if that's your first sort of leg down and we've corrected that leg up now, and we're starting to find a bit of a sell zone form up here. Look at today's action. It's opened lower, popped up into highs, took out all the overnight highs from Friday, and then we pretty much proceeded to sell off, 60.90? I think it was somewhere up here, 61, 61.10 or so. So it's come off, or maybe it's not up there. We'll look at the hourly chart in a second, but it's pretty much been sold off. The first half an hour was positive, and then from there we've just headed south, and we haven't really looked back just yet. And so whether we're starting to get a bit heavy up here, this is not, if you go back from this support zone, it's not something I put a lot of emphasis into. It's more of, I draw those support zones up and sort of these rising support levels up purely because everyone's going to be looking at something like that. And if that's going to be the area where we expect a reaction lower, I don't know, or are we going to break up and drop off that 62.12, that resistance zone up here, whether we're going to react off here and react lower, I don't know. But either way, I think it's a bit extended where we are. On the daily anyway, if we are longer term bullish, I'd expect still some sort of pullback, full short, build your high low, and really any of the sellers that are coming, get them squeezed back out in a decent rally as well. But that is all yet to play out. So like I was saying, if this is the first leg down, you've got potentially, let's just mark that up. Let's just try to mark that up. Segment. Come on. If that's the first sort of our moves down, and we take that from roughly here, we could be still looking down to 51.50. So there could be, and if that's the case, we could easily extend down to this support zone, which is from way back in 2016 into 47, say 48 even. We could extend that if, of course, the market goes into a bit of a selling frenzy. Okay, so you've just got to have all these plans ahead. It's not a bad idea. I mean, potentially if you're going to go short, if you're thinking about it, a longer term trade or something, there could be a lot of fat in it. Even if it doesn't play out, you could easily fall short a bit earlier and still pick up 100 points or so. Does that make sense? So if we go back down to the hourly chart, this is sort of the one that I've been looking at to see whether in the short term, whether you can go bullish off this level here at 60.40. If that's the case, we want to see this level hold up. We've just washed it out. We washed it out overnight, I think on Friday before we bounced. The US bounced into the close. We went with them. You can see that lower highs are pressuring in, but like we always say, if it hasn't broken the anchor, there's no need to be 100% bearish just yet. I mean, if you were selling it up here and you got lucky and you come into that support, great. But if you're a bear thinking we're going to take out 59.85, there's going to be a lot of people that would be selling into that zone, becoming bearish, and all they could be is building up for the fuel to push higher, which is this green scenario, for instance. So just because we're heading down the last, 3 hours of trade, because we haven't broken that level of 60.49, we could just building up that energy for a good rally to squeeze them all back out again and start to, potentially trade up to 61.20. So if you're getting it, for instance, along off that level, we don't break down, we start to hold this type of structure. This structure meaning we're looking for some higher lows off that level. Once we got confirmation that's potentially holding, get some higher lows. Your stop goes below the high low, you get a break, your continuation trade, and you're looking for this expansion up. Now, if we fall short, you could have potentially 50, 60 points up your sleeve before you have to worry about it. Or not 50, maybe 30 or 40 points up your sleeve before you see, okay, we're getting extended up there. I don't think it's going to play out yet. We're squeezing back down. We could be heading back down to support zone. I could stop myself out, book my 20 or 30 or 40 points and call it a day and watch it again. But either way, I think we're at that level now is key, and it's because we've got that washout there. I don't mind seeing the washout of it. It's going to be a key level. A lot of people would have seen that level. The Bears would have had a stop, probably potentially stop entry below there. They've been stopped in. potentially squeezed out if they have their stops above, say, 60, 75, nice wide stops. So the market will rinse a lot of levels consistently. They rinse them, so you're better off sort of watching that. G'day, Shirley. Watching that zone, it pops up, and if this second time round we don't take out this low, I mean, if we take out this low at 60.35, we could be looking at a scenario like the red. We break through, we pull back, build some lower highs. The pressure from selling continues because it's sort of a heads up there. Hang on a second, this could go into a deeper correction, potentially down to 59.85. And if that's the case, and if you can get off some lower highs, you can get a short off in there at say 60.38, for instance. I'm just going off my pictures. After this price action is built, because the sellers are starting to really take control, because that level is now broken for a second time. Say you got 38, or even a push through 30, for instance, and you get down to 85, you got 30 to 40, 50 points up your sleeve as well, before you're looking for a zone for the next reaction. Okay, so there's a lot to think about intraday anyway, and I think we're sort of at that key level right now. I mean, if this can't hold up, we might have to think about the bearish action. If it can hold up and we start to get a lift and we get that little contraction between buyers and sellers, meaning higher lows, lower highs, press in like we've drawn up here, then it could be potentially a bullish price action, and then we'll just have to manage it from there. So this probably could lead me into, when do you get out, or when do you exit a trade? Because what we've done here is just mark up an entry. So for me, what I'd always be doing, I mean, I run stops, and I think I was talking to someone earlier today about an old alert we had. And when I went and looked at it again, I realized they didn't have a stop on it, or they didn't get stopped out where we said. And they've held it for the last probably close to a year now. The thing is, it's back to where we entered it anyway. So, I mean, the problem is you've had to ride it through all that pain. I'm not a believer in that. If you get it wrong, you get it wrong. And there's a reason for that. I mean, and I'm happy to accept I don't know the reason. I'd never try to, I mean, what the last thing you want to do is try to get your ego doing the trades for you. So like I said before, when you're not in a trade and you're looking for the entry, this is easy. You can mark up your levels. You mark up your zone where you expect a potential, g'day Gino, we expect some sort of action, a reaction back up, for instance. And that's what you're marking up your zones for. Like I've marked up this support zone. Okay, if this is going to hold up, what am I looking for from there? I'm looking for this type of action before I take a long. If it doesn't hold up, I'm looking for this scenario. So I'm planning ahead, a buy or a sell. I think this scenario, if it plays out, we could easily get a move down to 59.85 as we get a lot of these buyers starting to get the pressure put on them. So anyone sort of bought above 59.85 and we get a break of that 60.40, there's going to be pressure on them. They've gone from being up quite a bit to being potentially only up slightly to going back to neutral. So they're going to be thinking twice about it if the pressure's, if you break a support zone. And that potentially if they get squeezed out, they're going to have to sell. So that could be the energy or the move for that move down to 59.85. So you just plan it out. But up until we get these scenarios start to play out, for me, there's no need to just buy it now, because I think the green's going to play out. I could be proven wrong pretty quickly. And on the flip side, don't just break it because it pushes down a few more points, or it touches down on that 60.35. It could touch down there and bounce straight back up. We don't know. All right, so we want to see pressure from buyers or pressure from sellers. So what I was saying, that's quite easy. If you can draw that up, just like I've done here, put it on your chart and just watch it and wait for it to play out. Now, the thing is, like I said before, once you're in the trade, other things start playing on your mind, your psychology of your trade. I don't want to be wrong. Say I get it wrong. I might take my stop off. I might do this. I might do that. I never muck around with my stops. I've done it in the past. Don't like it. And I'm a hard stop type of person, meaning I put a stop into the market. I'm happy to be proven wrong. If I get stopped out, just so be it. If I happen to get washed out and it pops back up and it's a positive trade, so be it. More often than not, I think I'm going to get stopped out and it's just going to keep going. And because once I've proven wrong, I'm trying to put myself in areas where if I'm wrong, I'm wrong. And there's going to be more pressure to come. If it's on the short side and I get stopped out when it goes back up, I'm wrong. And the market, I expect if that area gets hit, I expect a lot more buyers to start coming in, and I just want to get out. I'd rather be on the sideline. Does that make sense? So once you've marked up your entries and you get that entry to exit, you really want to keep it as neutral as you can and just flip it over. what would you do if it gets up to here? You know, what would you want to do? What would you want to see if you want to be a bull or a bear? And just do the exact same thing as what we just did, what we just marked up this for the entry. You could mark it up if we get up to, let's just take a step back on this one. What would happen if we get up to this zone? Okay. What are we going to see? Or what do we expect to see? If we get up there and we break through these highs, the next sort of key level is going to be that 6,100. Now, if it just pushes straight up through there, oh, okay, I might be quite happy. I don't know if it's going to be a washout. I don't know if it's sort of clearing the way. It's going to pull back, consolidate just below, and then take off again, and just rally. I don't know. So I'll be quite happy to raise my stop on that, especially if I've got this type of price action pullback, builds a high low, rallies up into that resistance zone. But that's the next sort of a key zone. Potentially, you've got a few minor levels in between. But that's your next key zone where you're going to expect some sort of reaction. You're going to expect either a reaction lower or there's going to be no sellers up there because the movement's really bullish and it's just going to blast straight through. But that's where you could come under pressure. So really what you want to do is just draw it up the opposite scenario. So if I've come up into that, well, if I can draw that, let me just get back to continuous. I want to draw it up and say if I see this start to play out, I might want to just take it off because we don't know if it's going to just have a deeper correction and just head lower. And at the same token, if we can just mark up different scenarios, we might do the same thing and say it blows up through. That could be telling us something different and we just get this two-legged correction lower and then it starts to build again. If it does that, great, we want to hold on to it. Okay, so we've got to know when we're exiting what we want to do. If it's stretched into a level, there's these key little things, and for me, it's just really flipping it over. The way you'd mark up your entry is the way you'd mark up your key levels and your exit as well. Just do it in reverse. But what you're trying to get out of the situation is your ego is trade what you see, not let your ego say, look, I've had a couple of losses potentially. I don't want, I want to book this while I can. And to say I book this, I book it into the resistance zone and I see it go another 100 points. I mean, I could tell you just the last week, I've had quite a few examples. I've booked a healthy gain, I thought. And then especially the other day, I think I took a 6-point loss, a 11-point gain, which was good. You know, I'm net up and I was all proud of myself, but then it went another 20 points higher. So that could have been instead of a 4-point gain, a 24-point gain. And even the other, I think it was Friday, I took 11-point gain and it went up another, I think about 10 pips. And there probably wasn't any reason for me to get out. So I was thinking too much when I'm in the trade as opposed to just going, let's just see where it goes, raise my stop. You know, you don't really want to second guess. You want to see the market produce something for you. If it produces this, okay, we might want to get out. It's touched on the resistance and it's starting to get a bit of selling pressure. We're building those minor lower highs. I might want to take it off and reassess it. And if we get this big drop, great, you've done the right thing. If you get this type of price action, it might blast through. It might even do something similar from here, touch on the resistance, do this 1, 2, and it starts holding a higher low. That's when you probably look at it and go, hang on a second, I might want to still be in this, or I might want to re-enter because I think it's got a new leg higher. It's cleaned out a few buyers on a squeeze back down, and then there's enough buying pressure back down at a lower level, minor lower level, so only slightly lower, that it's going to continue higher. So the strength is still there on the buy side. The buyers are still in control, and that's what you're looking for. Does that make sense there, guys? Now, let me just go back through. Lauren, would you hold overnight? Oh, for intraday stuff, depending what time frame. I mean, I'll just go show you. I can just pull up my trades. I'll mark them up somewhere. I don't know. But the way, basically, when I'm trading intraday, I would mark up a 30. Say I've got the hourly here, but I would mark up a 30-minute chart, and then I'd go down to the 5-minute for zones and trading off the 1 minute. So I tend to not hold off. I tend to not hold overnight on the intraday stuff. I'm out because it gets thinner at night. Even if you're trading SPY or if you're trading the ASX, the CFD, it gets a bit thinner, a bit choppier. And it's a bit tougher to hold overnight, and then you can get them. They chop around in the morning when the market opens. The futures chop up and down, squeeze people out of the market either side, reset for the ASX session, and then pretty much the SPY is built around the ASX anyway, so it's going off the ASX 200. As we're watching, it's just starting to tip through that level, so maybe we get this red play out, but we'll see how we go. Yeah, so I tend not to hold intraday stuff, because of the lower time frame, if it's looking really good, you can, but then you have to get enough. For me, I would have to be in front enough, um, because I think your stops have to be a bit wider, because you're starting to go back a time frame, potentially the 30-minute or 1 hour you're trading from, instead of the 1 or 5 minute like I do. And then I might be happy to, if you get a bit of a run on it, say for instance, you got it in this level. What was this? This is the new day, wasn't it? Okay, so that was when it was rally. Say for instance, you were trading off your intraday here, and you happen to get it just in this zone. I mean, if you could do that, that would have been, say you bought it, where am I? What am I looking for? No, rectangle. Say we bought, something in here, and it was intraday. You had a 10-point stop, for instance. What's that level? 09 down to 92. So that's more like a 15 to 20-point stop. So just say you got lucky, you bought it off your intraday 5-minute chart. You managed to place a 10-point stop on it, which is great. And then the market started to lift, and it's lifted. Where did it close? This is overnight, wasn't it? This is 2 a.m. But just say this was during the day, and then you saw that pop up, and then it opened up the next day. It rallied overnight and opened up. Obviously, if it rallies hard into the close, you could be inclined to, especially off this price action, look at that and go, hang on a second, this looks really strong. I've got a beautiful higher low that's built there. I could get that acceleration. We just, the day session, I've managed to get in. The day session's taken out these previous highs through here. I'm happy to swing that overnight. You would probably be happy, because the potential to book a small gain, like you could have booked, say it rallied another 30 points into the close, and you could have taken off 30 off the table. You might have to widen your stop. You might have to put your stop potentially back to break even, and it could easily get stopped out, and you've just given away 30 points. The payoff, because of this structure, could be worth the risk easy. So yeah, it's a case by case basis there, Lauren will say. Does that make sense? But it would all depend on how my trade panned out during the day, if I would potentially swing it. But generally, no. And that's because over the last years, I've traded options and all sorts of things, and I can't help it. If I've got a position overnight, I will stare at it, and I won't get much sleep. And that's just me personally. I would look at it, I'd watch it, I'd like to see where it is. I'd like to see, you could set alerts, but then if alert goes off, I might be asleep. Don't like that either. So there's all these things that play in my head, and I would just be happy to, if I got a 30-point gain, I'm happy to take it off and call it a day. Because, geez, during the day, you'd be lucky to get that. Lately, it's been some good swings. Is that all making sense? I think Friday, I did get a good little trade on Friday. It might have been 7, 8, 9. That wasn't Friday, was it? I can't remember where I took the trade on Friday, but it's worth looking at that price action too. So this is a 5-minute chart. Was this it here? 8th. Yeah, so this, in this zone, is where I took a long. And if anyone can see, you can see you got these higher lows coming to play, some higher lows. Every time it kept going down, it was getting rejected, and it gapped up on the open. And you see this big push down. So what that's done is, people have bought it in the open, potentially some buyers that bought it, they've been watching this price action, they bought it on the open, or, they were long overnight. The market's gapped up on the open, and it's coming straight back down and squeezed them back out again. So I would have said that move there was engineered just to squeeze out a few of those overnight longs, or all that sort of thing. But then you've got to take notice of the price action too, because if you can see this, it's come down. This is what I always talk about, that one. The person who told me was Davin. Davin's big into that. So see those two legs down, and it's popped up. So this type of action we've spoken about many times on shares, your daily charts. We've spoken about this action many times. This sort of thing to squeeze them out. It's got to wash out of the most recent high or low. All these sorts of things, and then you got this market pulling back and looking like in here. And if you dropped it down to 1 minute, there was a nice little entry there. That's prime. You've got to just take notice of that sort of stuff in context of what's happening in the overall market. We pushed down, we're coming off, we couldn't get into a key support zone. So any of the bears that were selling it through here, potentially if they're holding it, they might be looking to get squeezed out. They're getting a bit nervous, especially on the open. It's come back down. They're feeling good about themselves. Then we start to lift again. And they know during the day and the ASX started to rally, that market took off. And that's the same setup we said time and time again. Does that make sense? Just what we're showing you there? Any questions, shoot them through. If this is making sense, great. If it's not, yeah, shoot through an email. I can always explain a bit more. But yeah, this one here took off. I think I only got 11 points on that, and it was somewhere, I don't know, it was somewhere around here, and it kept going another 10 or 15 points. I mean, so be it. It turned around okay, and I thought it was going to come off into the close, but I didn't really want to go and short it back then. But you can see that price action. It's just it got a bit whippy. It's probably because of that daily trend is still squeezing down. So they look, all this sort of intraday price action gives you a lot of opportunity. So it's worth watching if anyone that's interested. All right. Now, I've probably banged on enough about that, but back to what we were just talking about, if we can go down and potentially see some shares, what was the, I can't remember, it might have been RMS I was talking about to somebody. Might have been. All right, I'm just trying to think of, I don't think there's any real example just here. No. All right, let's look at this for example. I just want to take notes. So we've got just what we're talking about at the final sort of bit, and then we get ready just to chuck in some share codes, guys, and we'll go through those in a second. But just to finish off about exits and why it's important to know where your zones are. Sorry, I just had to take a swig of coffee there. But this one here, if you can see there's sort of a clear zone. This way back in 2012, and the market spent a lot of time. It's come down. This is PNR. This is not RMS. This is PNR. So Pantoro Limited. This is a copper play, I think. This is one I've got my eyes on anyway. So you can see it's come down. It's built a base, spent many years, and then it started to lift. It has been lifting up until this day. So if we can, this is sort of the only real area that I'm interested in. You can see the market started to lift. So at this stage, we'll go back to this zone just at the end of 2017 to say if we bought it there, what would your, and we buy it, we can show you why we were looking to buy it, for instance, off your high or low. So you set up your entry, it's played out well, and then yeah, you've jumped in. So once you're in there, it's all about managing risk, and that's all you're worrying about doing. You're not trying to read about different things. You're not, and for me, I'm not. I would read the fundamentals, but I don't trade off the fundamentals. I would rather everyone can do the work. I'd rather see the price action and what levels we're coming into, and if we start to see some weakness, because technical or fundamental analysis, if you buy, sooner or later you're gonna have to sell. No one just sits there and holds things. Generally, they shouldn't. Well, they don't. You're gonna want to lock in the profit, whether your fundamentals are saying to lock it in or your technicals. I think technicals you can refine the level, but either way, sooner or later someone else to sell. And that's probably a mental thing too. You don't want to see some gains evaporate. Does that make sense? So you want to just keep an eye on them and make sure that I don't want to give up gains. And where would it potentially come into a zone where it's going to come into some trouble? Now, 40 cents. We're going to go back to the daily in a second, but 40 cents was a key level. If we were buying in this one, we'd have to mark it up. We'd probably mark up through the highs at 25. I won't make that thick at the moment. And then, so we've got 25 as a level. And then the next level, really, we're going to be concerned with is up towards that 40 to 45 zone. So if we go back to the daily, and I'll minimize that, I want to try to get into this area. Okay. So as an example, all right, just going to screen snapshot that. So we've got, we've got our weekly, the market's heading higher. We've got our pullback on the weekly. So we've rallied up, it's come back down, we've come back down, and we started to lift again. And really, this is your first sort of a sign. So if we bought it through here, Great. Okay, that's where our risk was. And then we started to play out. It's gone quite nicely. So we were saying, I think it was around the 25 mark. So we're buying it just below 25, which is really just this high. Into that high, it was, at that stage, it could have been a risky. We're a bit stretched up here, but we know that the longer term weekly structure, we've just had a bit of a correction lower and we're starting to hold at higher level. Even if you got a bit more risky and you could put your trade on, through that level, which was 21, knowing that the first port of call you might have a bit of problem was 25. But I consider that the market's still on a rise, so the weekly is well and truly in your backs, the weekly trend up. So you've got I guess, a lot of wind in your sails for it to keep moving higher. And of course, Harry hindsight, it's gone straight through that level. That's great. So a next level would have been up towards, we're talking of 40 cents. And that was more of a major level because it did a lot of action around there. I mean, years ago, but yeah, it was still a key level. And we know that technical traders would be looking at levels like that, thinking, okay, I want to keep an eye on it and I want to see if it can get there. Um, I want to see what price action if I see a certain type of price action, what am I going to do? Am I just going to get out? Um, does that make sense? So we have to play it now that we're in. Say we got in here, the market's pressed up, pull back. You can see these little levels. This is great. It's another little entry in here off a minor higher low. You can see that it plays out, breaks through. You expect that price action to lead a break of the most recent high. So that's just something I guess I'd point out. What we've seen is, clear that up, the market's pressed up again. So at this stage, we're feeling confident. We're getting up towards that 40. Um, Potentially, I would probably have my risk quite wide um, below that major high low off the daily. I'm sitting on gains anyway, so I'm all happy. I've got a pretty much a risk-free trade, and I know if it gets me there, I'm going to be proven wrong. Um, that's for that there. I would leave it there as the market's heading up and it's holding high lows. So the next thing we did, you can see this price action has just changed. If we go and draw that up, we pushed down. Okay, that's great. As soon as we got up here and we started to find a bit of pressure, and you can see at this stage we're overbought, and then at a lower level we got overbought again. So to me, I would have been assessing that, going, "Oh, hang on a second, what's that saying to me?" That's saying that, okay, this run up, say it's met with 100 sellers, and this run up is met with another 100 sellers. So the buyers are overwhelming the sellers. The buyers are overwhelming the sellers here. All of a sudden, this little pop up to get to overbought again, it may have been met with 200 sellers, for instance. So what's happening? Equal number of buyers are trying to push it, but the sellers are potentially starting to stack up and putting the pressure on. So the buyers were only, with all the effort they can give, from say oversold to overbought, they could only push it up so far. So for me, that's a bit of a heads up where, oh, hang on a second, this, because I know we're coming into that 40 zone, I might want to tighten the boat up a bit. I might want to tighten up my risk because it's starting to look a little heavy. And if this lower high plays out, I expect a decent correction lower. And I don't want to be in it when it's correcting lower. You're going back through this correction because then you start having to worry about how far is it going to go. I could go back to break even. It could just keep correcting low and take out that 18 or 19 or 20 cent zone. And then I've gone from a good profit, turn around and just because I've been holding, it's just into some big losses. And like we said before, lose when you've got money stuck in a share for long periods of time, it's wasting it too. You're better off just closing it out, and that's why I think stops are important. Get stopped out, reassess it if you're right, and it just keeps going down. You can use that money somewhere else. If you're taking a small loss, it doesn't matter. You can make it back pretty quickly if you got, on your next trade. But if you sit in something that's against you for long periods of time, that money's tied up doing nothing. It could be tied up doing nothing for a while, for the sheer fact that you don't want to close it out. You don't want to take a loss. But anyway, got sidetracked again. So that's why I'm happy to get. If I think I'm anticipating that we're oversold here, so we're overbought here, we can't get up to these highs again, and don't forget that's below a key level at 40 cents. That's all coming together to say to me, hang on a sec, we could be getting a lower high. So I would potentially, I could raise my stop up here, lock in a bit more gain if I get stopped out, so be it, that's the nature of the beast, and then just reassess it from there, or I could just tighten it up a bit more. You can see this type of price action playing out. We had another pop up there and we couldn't get it. I could have tightened up a little bit more. That's a little bit more aggressive, but you figure by then, if I get stopped out on see this first red candle, or these couple that joined in here, when it first pushed down through about 33 cents, I just draw it up in yellow. This is the price action I'm looking at. This little pullback, pop up, pull back again. and you can see what's happened here. It's just gone boom. On that's a couple of red candles there. Just when it put through, I figure what that's doing to me is confirming a major lower high. We've got some minor lower highs in place. So to me, it's going to at least attack that low at 31 cents. So for me, I guess if all that's going to play out, I'm better off being out just here and locking in some gains. And then, as it's come out, again, Harry hindsight, it was the right thing to do. You've locked in a little more gains than, say, having your stop down at 30 cents. It's probably only about 3 cents, but hey, 3 cents is 3 cents. Does that make sense there, guys? So all this is trying to look at the same price action, what you look at to enter, and interpret it in a way that, okay, it gets you in a trade, but it can also, it's the same way you're just flipping it over to get out of a trade. Because the last thing you want to do is, say you're looking at this, or you're looking up here, you want to get out, and all of a sudden, or you get out here, instead of rolling over, the market sort of chopped around here, held minor higher levels, and boom, straight up 40. And in essence, what the price action was saying to you is not to get out. You did get out because you're anticipating a rollover. Your ego is saying, oh, I want to lock in that profit. I want that. Even though you've locked in some gains, this could be the one that goes up 100%. You don't know. So what you want to try to do is give yourself every opportunity to get that big one. And if that means cutting yourself, giving up a little bit of gains by not just taking it off the table, but tightening your stop a bit and getting stopped out, I'm happy to do that, because there's going to be those ones that run. You just keep rallying up, you keep raising your stops, raising your level where you get out, whether you use a hard stop or not, but raising that level where you're going to get out, and then just seeing how much you can drain out of that trade, how much you can, I guess, siphon out of that rally. And you're never going to get that if you just cut it off for no particular reason apart from ego or scared of giving up some of those gains. Does that make sense to you guys? And I mean, in all honesty, I don't mind on the shares. I think I do all right on the shares, but even on my the intraday stuff, I still do things like that. Like I just said before, took 11 points and it went up another 20. So you could imagine me there gone from thinking I was a legend for taking 11 points to just looking at no particular reason to get out. Once it played out, once it unfolded, no particular reason to get out, and the market took off. So you sort of give up. So they're the trades that you want to be able to book, and that's going to dramatically improve your stats. All right, does that make sense there, guys? Anyway, let's get rid of that, and let's go on to some charts. So first one, Min. How come it didn't come through? Mincore. So this one, that to me, you can see that curving back up again. We spent the good part of, since about August, holding that level, holding that 14. I know we pushed through 14, but we've held it and we're starting to come out the other end. You can see the MAs are starting to roll up on the daily. We bounced off the MAs at 1550. We're starting to head higher. You can see that. So it's starting to roll up. So that's, to me, is coming out on the right side. We are a bit extended up here. So, for it, and we have got pretty much right at that 1750 where it's only a minor level because it's not a key level for this downtrend. The key level's already been broken, I think, somewhere around 1625, 1650, this level through here. That's already been broken. So we're on the way up, but what I'd be looking for here is the first pullback. Maybe a pullback to the MAs, you might get to 1650 and then look to buy on the rise again. So go back to the weekly. The biggest problem here is that weekly is extended on the upside. Doesn't mean you can't keep rallying from there and stay overbought like here, like here. I mean, look at this rally. Started when it was overbought, and by the time it started, before it even pulled back too much, you got right up to 21 bucks from around 12. So, that's a healthy gain when the market's overbought. So that there was into all-time highs, wasn't it? So that was when it was pushing into new highs. So I can't remember what Davin says. Got a good comment for that. Everyone's a winner. So everyone's a winner. It's into new highs. So what we're doing now, we're below the all-time highs at 22, but potentially that's looking like it's just a weekly continuation trade. Okay, we've gotten the low here. It's propped up. We had a leg up, contraction, or that correction lower, built a major high low. We've got the next expansion, expansion to new highs. Big corrective action through last year, and we look like we're coming out the other end of that correction. Just bounced off the 200 MA, starting to pop up above the 50 and the 20, but on the weekly chart, I just feel we may have a bit more work to do, mainly on the weekly, just to cool the heels a bit. Cool the heels, I mean, we're right at that zone now, so there's no reason why it can't fall over from here and take out this low. So I'd ideally like to see it pop up, say pop up, pull back, give me the price action on the weekly. Then you can drill down to your daily to get an entry. And the last thing you want to see is it to break through 14. So it'd be nice if it can sort of pop up, take it out, pull back to say 17 again, get your entry. But once that's played out, that's saying a different story to if we pull back here before we break out of that contraction. Does that make sense? Because we've just broken up. It's going to come on the radar of a lot of people. And then if we can pull back just to clean out a few of those late, all the early buyers, potentially these buyers that have just bought it above 17, clean them out, start to build. And I think longer term, you're going to get a lot of traders going, hang on a sec, that's the start of a new leg up. The start of a new leg up means potentially a retest to 22 or a move through 22. And then you're starting from there, it's just looking to your levels, 22, 20. What happens if we reach 20? Are we going to react lower again? Oh, we're going to just blast through it, go straight through 22 and just managing the trade from there. Yeah, but either way, it's looking good there. Is it Vin? Next, try and get through these. Sid looks like potentially rolling over to me on the weekly anyway. Don't like the daily either. It's more that reversion to the mean. It's popping back up to the longer term 200, backing off again. It's not a sign of strength just yet. If we go back to the weekly and just draw it up, Mark, right? We've got this top price actually. She's got a key level here. And what it's done, it's backed off, come back up, and it's just banged on that high again. And you can see there, it's touched on it. We've got 1, potentially 2, 3, 4. So it's struggling a bit. The more it struggles up at a certain level, I think the deeper correction you're going to have before it can break it again down the track. So whether this is enough, oh, let's just draw that up a bit better. Whether this low is enough, it's pulling off that low, great, or whether it's going to go through. So the daily's not saying that that's the level just yet. The MA is across, it's more choppy action. I don't see any reason to buy it yet, or I don't really see any reason longer term because we're holding that 200 still. So there's no reason why, you just got to mark up your levels. These are sort of your key levels. 720, say. If we pop up, let me just see, we're drawing that, whoops. Drawn that level, that's the support level around 625. We pushed up off there, we've come back down, and we're about here at the moment. We've got our resistance zone at around 720 there. Now, if we start to pop up, I'd be ideally looking for that action and then a major higher low to build and then buy into that major higher low. I'm really skeptical when things bounce around like that and go straight up. If it goes straight up and through, I'd expect it to come back and find some more resistance up at 725 or 35. Doesn't mean you can't make some money on it, but that for me, I'd like to see that longer term and then drill down to your daily for the entry. I just think right now you're sort of in no man's land. All right, CV. Oh, did I spell that wrong? CMW. CMW's had a good little pop up here. Start of the year, it's gone with everything else. To be honest, that weekly chart looks messy to me. Last time it was overbought, it was way up at 115. The good thing is it's holding higher lows, but you extended off those higher lows. So it was oversold down here when it was trading about 98. Last time it was extended down, on the stochastics anyway, in oversold territory, it was around about 94. So you can see it's holding higher levels here and here, coming off oversold, holding higher levels. Now, it has come off oversold, but we've gone straight into sort of that overbought region. So not saying that's 100% guarantee that we're going to drop off now because we're overbought. Like I said, it can stay overbought, keep going higher, but you've got to look at that and say, what kind of probability trade, if I was going to buy that, up here, we're at 108.09, what probability can I allocate to that trade? I would allocate at the moment, just by looking at that weekly, I would allocate a low probability trade. So I wouldn't buy that in instance. I want to see a pullback. I want to see some of these buys that are cleaned out from, the rally off $1. Whoever rallied off $1 to $1.09, I want to see them cleaned out. I want to see another inside high low hold, and I'll be a lot more confident in buying that. And if you bought it here for instance, you'd have to have your stop. You'd want to have your stop at 105. So if that breaks, we could be heading back down to $1 quite easily. And then you could just reassess it, take the loss, take the hit, builds again, buy it, make back your loss and more. So that could be the name of the game. And I think it's overextending the daily. So I'm just seeing it struggling to get back up to those highs. So it's one to keep in mind because longer term, this is a major high low at 98 cents. So you just want to be as close to possible and find that it goes back down to oversold. You know, on the stochastics, we're holding a higher level, potentially 103, 104, 105, you know, in that zone, and it's starting to hold up there, sitting on top of the MAs, and then maybe look for your entry off your daily. I think that's probably the name of the game. IGO, similar type of thing. Higher low, so a low here, built a higher low, built a higher low, but it's all in context of the major high at $6. So that big, so if that's the case, you've got this big push down. This could all be major correction. So there could be a lot of resistance ahead of it, which, okay, so be it. Because it's off a weekly chart, you can still make money easy if you drop it down to the daily, minimize your risk. You could easily make 2 to 1 off that. The good thing is, and why I do like it, is if that's the low, is that what I'm looking at? Start of 2018. I think that's the high. Yep. Why I do like it is that you got, where am I? Here we go. So for me, that we're looking at the weekly levels, don't forget. We've got potentially what we're looking at is weekly high, low here. Okay, that's probably confirmed itself. It's also your first push up out of that contractive price action of this leg up. Contraction, we're starting to push up again. So really for me, I'd want to see, because we've had a good run up and it's getting a bit stretched up here. We're coming into a key level at 49, so 490. We could get a reaction lower. So if we do get a reaction lower, I'd like to see that 2 moves and then start to build. Clean out a few traders, maybe 30% retracement of this move up, or 40 or 50%, doesn't matter. But I don't want to see 60, 70, 80% retracement right back down to 390. I think that's too much weakness for me. And I'd like to spend a lot more time building another major base if that's going to play out. But if it has a shallower retracement, you know, stay somewhere around 50% or higher, then, and done like this, 1, 2, and then build your daily higher low, then I think you'd be confident that you can take that, minimize your risk, you know, just below the most recent higher low, and then see if it can prop up through 490 for a run up to at least 570 or so off those highs. But it is extended up here, so I'm sort of leaning towards this price action, a bit of corrective price action lower, but to hold a major weekly higher low. I think there's a lot of shares like this at the moment with that type of price action. All right, let's get on to CSR. CSR, it's down on its knees, isn't it? Don't like it, to be honest. And you can see the reason why I don't like it is come off the highs at 590. Okay, it's got absolutely poleaxed. I don't know why. But either way, it's come down. This little corrective action higher, boom, straight back down again. And you probably, if you measure those legs down, they're probably about even. Let's just do that. Oh, I don't want that. Do that. I'll do that. So what I'm saying there is that leg down. Oh, I can't measure it. I keep forgetting. It's about even to that leg potentially. Do it in yellow. Yellow's a nicer color. So potentially that leg and that leg are even. And you got this little minor pullback. And anyone that's bought it, they're probably looking at this zone around $4 off the even number. Bought it up. We've been squeezed straight back out again. So now you've got that 270 down to about 240 in play at the moment as a potential support zone. But this action could be the same as this action here. It's looking ominously similar. Okay, you can see also that, that little pop up here, you've gone from overbought to oversold. We're coming up quite hard. So it's taken a lot of buying energy, buying pressure into the offer. So you're hitting the offer, the buyers are trying to give it a good nudge. Problem is it's not really going anywhere. And what we said a few days ago, if the sellers are thin, if you've got a thin market on the sell side, no one really interested in selling, And especially off these lows, you should expect a reaction higher, a harder reaction higher, and then potentially look for your high low to buy into. Great. But instead, the offers still look a bit thick. There still seems to be quite a few sellers pile up trying to get out, whether they're just copying it from buying it way up here, or they held it for many years. We don't know. But to me, that type of price action is looking a bit heavy on the sell side still. So for me, why would you want to jump in on the buys just yet? Because I think it's got a bit of work to play out still, just to clean out a few of those sellers. Whoever's wanting out, get them out, and then see the market start to expand up. You want to see these sudden rally, good spikes up on the green side, on the green candles, and we haven't really seen that just yet. So yeah, at the moment, I don't like this price action, Gina. I'll just be sort of sitting on my sidelines watching it for now. But look, we'll see how it goes. And say for instance, if you look at recent sort of pops through the lower highs, so if you bought it through that little level, it might have got through the level and had it by 5 cents and pulled back 20 cents. So it's not going too far if it does. If you're buying a break off a higher low, it's not really going anywhere and it's come straight back. Whereas a bullish market should be sitting on top of the MAs and you get the market chasing itself higher and then you get your pullback. So it's that fear of missing out that's driving it. There's no fear of missing out here at the moment. From the buy side anyway, they're still stacked up on the sellers. NXT, Lauren. We'll go through these three quickly and then probably call it a day there. NXT, and clearly we had some corrective action there, and that's your 1, 2. What we'll do, 1, 2. We'll draw that up because it's mainly for me. This is one would be gearing off the weekly. So you can see the market's, pressed up, inside level, popped up. It's got some inside. So this is beautiful price action. You can see that. Pull back, up, pull back, all the way up. Then what we've got is a pullback. Okay, we've had the pullbacks before, but this is where it changed. This is what you've got to notice where the price action changed. We popped up and we struggled. You can see this action here. It struggled in here. Whereas before it didn't struggle. It accelerated up, didn't struggle. So we're starting to struggle there. All right, and that's where if you were long from in here, for instance, you're probably looking at that going, oh, hang on a second. Technically, it's looking all right. The weekly, if we break those lows, I think we can have a deeper correction because once you break those lows, a lower high in the weekly is confirmed, and you're looking at a deeper correction. And as it's played out, that's what's played out. This price action has led to further selling. You've taken out some key levels, and we've gone into some sort of corrective price action. It's chopping around here, consolidating through here. What we've done now is just lifted. All right, and if we can just clear that up, so that when we go into that price action, just say you did it well, you got in here, or you even got in here, or got in here, and you've taken a profit. Maybe it could have been a bit more, but hey, doesn't matter. A profit's a profit. We're on the sidelines watching again now. All right, because we know the market's correcting. We don't want to buy into a correction. You want to buy when it's starting to lift, when it's going into expansion rather than contraction. Remember, never buy into contraction if you're looking to buy anyway. You want to be buying into expansion because that's when you're not going to waste your time. You're going to buy on the right side. You don't really take any heat on the trade. When it goes up, you're on board, and it's easy. It's a lot easier. But if you buy and say you're buying in through here, it's pulled back. You think, oh, okay, 650 is a good price, 650, and then you're down, up slightly down. You spend a lot of time doing nothing, and before it just started to put you back into profit again. But it's not to say that it can't roll over, take out 575, and then okay, you made a loss on it. You just want to see the market prove to you that it's actually expanding. And I think if we go back to the daily chart, this is what I've got my eye on for this one. Here, you've done a bit of work. Okay, you can see that. To me, that's a confirmed low, a confirmed major higher low. We've done a lot of correction here. You can see we sort of corrected through here, another leg lower. Then anytime it popped down to this zone around 570, it was getting bought up. So it's a good reaction. This is the first time it's breaking through this, say 670. It's taken off and it's holding above 670 at the moment. So that's a really good sign. And that's broken out of this, see this trend down, this corrective price action or this contraction lower. We've just broken up out of that contraction. So from here, it's pretty simple. I'd be looking for, I wouldn't mind seeing a deeper, a sort of a slightly deeper correction, maybe 650. And then again, like we drew up on the SPY before, that price action. And then for me, I think that could lead to a nice little rally back up. And then you'd be targeting right up towards $8. Or you got this level in between at around 740 or 50. But you will be, that's the first port of call. But in essence, if you get this price action, you've got a good profitable, you might have a 1-to-1. You could even have 2-to-1 up your sleeve before you come into some sort of problems. Does that make sense? So yeah, I think it's getting a bit extended, but then again, I don't mind. You've got to take note of this too. When the stochastics come off, selling's coming in, but it's not actually going anywhere. Look at that price action. It could be just, I mean, what do you call it, a flag? It's holding some inside higher levels. It's getting sold just below 7, but it's still contracting up with the buyers. Pressure's coming out from the selling. So if they give up, that might just pop straight through 70 and it can contract sideways. So you don't have to get this price action where it corrects lower. It could correct sideways, do this, and then boom, up we go. So just keep an eye on it anyway. That's good. What was that? Let's quickly get through BAP. You can see a bit of heat's coming out of here as well. We're right back into that zone around 550 to 6. I don't like the way it's corrected quite hard. Okay, fair enough. The market's come off. It was the same time it's come off with the market. So the market got hammered. Bapcor's got hammered as well, which you would expect. But maybe you can see the difference, the way it's been sold down here, been sold down. Any sort of selling is starting to come into that same zone. Did here. Let's just draw it up. No, well, let's try that again. Sorry. Okay, what we've got there. Good press down here, straight back into that zone. Okay, bounce straight back into that zone. I got bought up again. Okay, lower high. Yeah, fair enough. Washed it out, but pretty much here again, it was in. If you can take a step back, you've still got that level through there. It's just bouncing off that zone again. So for me, really my key level, it's on the weekly. I don't know if I'd chuck my, no, look, that's correction. It's correction into that zone. It's still getting bought up. It's bounced off here. I wouldn't want to buy it just up there just yet, but I would rather see come off this level. Whoopsie daisy, come off this level, have a deeper correction, potentially around $6 or so, and then start to go. I just don't think this is enough emphasis. The way it's sold down, I'd rather see it chop around a bit, spend a bit of time. And what the time is doing is it's like time heals wounds, doesn't it? So anyone that's been chewed up through here, that bought it and has been chewed up, they may be looking at it again saying, okay, I could have a second nibble at this. I might try again. Because we know people fall in love with stocks. They've done all their research. They've done all the analysis. Still think it should be valued at $8. Think it's undervalued down here and they're willing to buy it again. But I think it's going to take a bit of time till, especially if they stop themselves out somewhere up here and they took a small loss, or if it's a large loss, it needs more time to heal. Some people just steer clear altogether, which I would do. If I take a big hit on something, I tend to not to go back for a long time until I built myself up again. It's a mental issue. But anyway, I think it might have to spend a bit of time because of the way it's come down quite hard. It's cleaned out a lot of these buyers and cleaned them out fast. The market just fell over. I would like to see a retest, potentially at $6 or higher than this zone, say higher than 590, chop around here, and then start to see the high lows hold and just the confidence built in the stocks, and then start to rally from there. But we'll see. What was the last one? CUV. Let's finish off on that. CUV, yeah, I've been looking at this one. I don't want to, and it's probably the weekly that's kept me off. It's had a good hard run up here. We're coming up into a fair amount of resistance up here. And so go back to the weekly, all right? Go back to the weekly. We rallied up, had a good corrective action. We've got the high low here. That's great. And then we push back up into that zone. Each time we're starting to get a bit extended. We're starting to get a bit overbought here. I'm not saying, like I said, not saying that don't get into it. It could play out if we stay overbought and just pop through. I just think this could be particularly low probability trade. Then again, saying all that, I have got it on the radar. And it's because this price action looks really, really good. And you see how it's rallied up hard. It took out this inside level at 21.50. This consolidation over the good part of, what was that, a month, was on the high. So it's like a 20% pullback of this rally up, 20% pullback, and it's gone again. So it is showing some strength, if that makes sense there, Gino. It is showing some good strength. And I mean, if it goes through this high, I'd like to see it chop around here and hold this level. If it goes through this high at 23.50 after a couple of days, then yeah, you're minimizing your risk, and that could be what's going to blow straight through 24 and get to 26 before you know it. All right. So yeah, and that's all because of this price action. It's this action here, pretty much from October through to end of the year, 3 months worth of cleaning out these late buyers, cleaning them out of the market, put them back on the sidelines, and we're starting to lift again. So it is building some interest. Okay. So yeah, it is definitely, I think, one to keep on the radar, to watch. MAs are up. I just think up here, we're coming into that 24 zone. It's a bit extended on both the weekly and the daily. So for me, I don't attribute a high probability trade to it. I love the price action, but the way the markets are, if they roll over, if we get a 800 point down on the Dow, we're going to get creamed on this because, and by that I mean that we know we're up into resistance. It's taken a lot of energy to get up here. So to me, the weighted numbers are on the sell side. If you get the market, I think it's going to gap down quite hard, as opposed to something that's starting to build. You're at the start of a potential leg up. Say here, if you bought it here and the Dow ends up down, it could hold its ground quite well. All right, does that make sense there, guys? Hope it does, because we're going to have to finish there. But anyway, so anyone that's new, thanks very much for joining me. If you've got any questions, send it through to support@tradesetup.com.au. And then I'm more than happy to email you back with some answers, or I'll make something up to keep you happy. But anyway, I think next week, I just remember then, next week I can't make it at 12:30. I've got my 4-year-old is going to kinder, or 4-year-old kinder, first day on Monday, and a parent's got to be there, and my wife's away that day at work, so won't be able to make it at 12:30. But what we'll do is move it to Tuesday at 12:30, so that the live stream will be at Tuesday. So if you don't get a heads up on Monday, don't worry, you'll get something on Tuesday morning, and we'll do it at 12:30 on Tuesday. All right. So anyone, thanks very much for joining me. Just remember, it's not next Monday. The next stream will probably be Tuesday. And then have a great weekend, have a great week, and hopefully it all works out for you. And we'll speak to you then. Cheers, guys. Bye.